Does that work? This may or may not be recording. I hope it is. If not, it'll end up as a chapter. If instead it's a whole full-on clip. Fantastic, right? So the GME, right? 15 minutes. Where are we? We're over here. 15 minutes, right? So price action. Let's put it in context. It came from much lower down. This is we entered into what is potentially an equilateral triangle. In a bullish move, it took us up in, put in the high and the low. Within that, you'll get a measured move. And you could draw that out and it'll take you up to at least the wick high of its previous support resistance lines. Within that formation, you broke out of it at probably sooner than 75%. At which point you wonder, like, does that mean that prices are being front run? Is it obvious? Like, is everyone buying the rumor? And at that point, you'd wonder, is there going to be a retest? And does that retest come in at around 75%? And here you have that retest at what would probably be 75%. At this point, you wonder, does it break back into its previous pattern, or does it use what was previous resistance as support? And at that point you have to ask yourself, was that the diagonal or the horizontal that's relevant, or is it a pattern that we're still in, or some reflection of the psychology of market participants that will result in a strong bounce on a Fibonacci, or what else, what other buy signals are going to come in and perhaps be a catalyst? And will it be speculation based on things that we can identify in advance? And one of those things would be retests, and of horizontal support would be I'd direct your eyes to, and then I'd suggest looking at Fibonacci's for measuring the strength of the trend just on the price action alone, and price action is king. And I'd say if this one came in and touched in around here, 382, and then went on again, that'd be very, very positive. The 886 retrace of the bigger Fibonacci, the top screaming out at around $244, and then above there you've got other areas, the Fibonacci extensions at 1414 and 1618 that are also really interesting. And that's just looking at 50-minute time frame, talking about this stupid little pattern, which itself represents the truth of price actions that we're consolidating at resistance, and that which is like flipping that resistance into support. The more and more you hit it, the more significant it becomes. The significant leads to important things when it's broken. The first three touches are what makes a support line valid or a resistant line valid. And as such, this you'd look at it and say, well, it's had its three, it's had plenty more, and that may be why you're looking left here. It's had three on the diagonal, now you've got your three on the top side. You come back, look at the strength of this retracement. Anything above the 236 in this previous fib here, anything around the 382, which is just above that, you're looking at left here and you see this is where all the intense price action came through here. It's where the lows and highs all came in the middles all together. This is it in around 208, $209. So testing these areas along with these moving averages and this pattern is totally natural. It's what you'd expect to happen. Here afterwards, you'll see the measured move, which two of them is this. If it's a bull flag, has a long measured move, which we're not even going to talk about because we've covered Fibonacci extensions and that's enough. And then within that, there's another smaller one, which is like this high to this low. We can just say that ourselves. It's 197. This body is around 208. The wick on it's actually around 224. And that's, you're looking at something around 12 to $30 move at the top of it if it does confirm this support, and that may be from this horizontal, or it may be from this diagonal, or this horizontal, or if it goes lower and drops back in again, we'll talk about all different things, and it may be the character of what we're looking at will change. But from here, you're looking at a move, should it be here, taking you up to around 224. And then after that, if it does break through there, you're looking up 250. And so all those measured moves and all those Fibonacci extensions and all those momentum indicators go together to suggest that that's like enough of a degree of confluence that you would take it as a reliable information, especially if you get good signals. And those signals here would be like confirmation candlestick patterns. And the first one you could expect to see in a 50 minutes at this stage would be bullish convergence or hidden bullish divergence, along with a ghoulish engulfing candle, which you're getting one on 15 minutes. You got that there on 30 minutes. You obviously won't have it, but you have got positive ideas, and that is a doji on the lower side of the move. On the 4 hour, you all really needed just to open and confirm above your pattern. You managed to do that successfully. That's a positive retest on a significant time frame. Up on the daily time frame, you can see this is like very, very positive, stuck in the bullish control zone, not putting in any sort of negative trend yet. You've got a bullish, positive slope on things. Like, sure, it's lower than its impulse into it, but that's the way price action works, and it's the nature of oscillations within, like, this momentum oscillator in particular. You see it wind, wind, wind. And so this is what you expect to see should it stick and persist within here, as a test of the top level of the bullish control zone. You're already at all of the important levels of resistance. You're just tipping them and tapping them all the time during the day. So you get any sort of momentum that'll do that. You smack the shit out of this. You'll be way up at these extensions. Easy peasy, lemon squeezy. That's the GME Busy Apes section. Hopefully that worked. Stop recording.